Welcome back to Financial Insights in Minutes, where we summarize top financial videos to keep you informed without the hassle of lengthy viewings.
Today, we delve into crucial insights from industry leaders, discussing everything from cryptocurrency trends to economic forecasts.
We'll cover major topics like the impact of the Federal Open Market Committee meetings on the stock market and Nvidia's earnings.
Plus, we have valuable takeaways from experts like Cathie Wood, David Lin, and Melody Wright.
So let's jump right into our first summary, starting with insights from Harley Finkelstein on the transformative impact of AI on entrepreneurship.
Let's start with Cathie Wood's take on whether ARK funds can thrive in this climate.
And don't go anywhere. Right after this, we'll reveal insights on Nvidia's upcoming earnings.
Just a quick note, this is educational content and not specific investment advice.
Entrepreneurship is experiencing a remarkable renaissance.
Harley Finkelstein of Shopify highlights how AI is reshaping this landscape.
Let's explore his insights on AI's integral role in transforming business operations.
Let's dive into his insights and uncover that.
What's the essence of Harley's message regarding AI and entrepreneurship?
He believes that AI will revolutionize the way entrepreneurs operate, enhancing efficiency.
So we're looking at a future where AI handles more operational tasks.
Exactly. This evolution will level the playing field for all entrepreneurs.
Shopify's global traction is noteworthy, isn't it?
Absolutely. Merchants from diverse sectors are gravitating towards the platform.
What does this growth signify for the future?
It suggests a vibrant e-commerce landscape moving forward.
How is AI reshaping the shopping experience?
AI is personalizing shopping experiences beautifully, akin to a personal assistant.
And what's the benefit for entrepreneurs?
It gives them a competitive edge and reduces operational costs.
Could AI shopping agents soon become our go-to companions?
That's what Harley believes. The future of shopping looks very different.
This could redefine consumer interactions, for sure.
Absolutely, a groundbreaking shift.
So what's the takeaway?
Businesses must embrace AI or risk being left behind.
Clearly, adaptability is the name of the game.
Definitely, and the innovators among them will thrive.
But there's much more to explore. Up next, we'll hear from Jeff Snyder on labor market trends. The latest labor market update raises serious concerns.
Jeff Snyder sheds light on the deeper issues at play.
What prompted this insight?
The alarming earnings report from Target coincided with the labor data.
So what exactly does Jeff argue?
He contends that a weak labor market indicates a looming recession.
That's a significant assertion. What supports his claim?
He references the latest BLS employment figures and Target's disappointing performance.
The decline in Target stock is quite worrisome, isn't it?
Yes, it signals more than just a minor setback for the company.
How does this tie into broader economic trends?
It suggests consumer spending is under pressure, hinting at economic strain.
The labor statistics paint a grim picture.
Indeed, job growth is stagnating.
What implications does Jeff draw from this?
He implies we may already be experiencing recession-like conditions.
Jeff indicates a rise in unemployment could be imminent,
especially with ongoing retail struggles.
When could we start seeing significant effects?
If these trends persist, notable changes may arrive by next year.
What's the main takeaway?
The labor market is a crucial economic indicator, and it's looking dire.
With retail in distress, what should consumers watch for?
Exercise caution. Indications point to greater economic turbulence ahead.
If this summary has provided you with valuable insights, consider subscribing.
Your support helps us create more essential content.
What does Melody Wright envision for the housing market?
She anticipates significant declines in home prices starting in 2025.
What is driving this predicted decline?
Let's delve into the details of her analysis.
What's the main takeaway from Melody concerning the housing market?
She warns that a surge of motivated sellers will lead to falling prices.
And when does she foresee this starting?
She sees it happening by spring 2025.
Are delinquency rates really on the rise?
Absolutely. We've seen troubling double-digit increases recently.
What implications does this have for homeowners?
It indicates they may feel pressured to sell at lower prices.
Is the housing market truly frozen?
Indeed, sales are at record lows since 1999.
What's keeping buyers away?
High mortgage rates are deterring potential buyers.
When does Melody expect home prices to start decreasing?
Material declines are anticipated to begin in 2025.
That sounds serious.
Certainly, a wave of distressed sellers is likely to emerge.
How should viewers navigate this market?
They need to closely monitor local housing trends.
With rising delinquencies, vigilance is essential.
Absolutely, staying informed is crucial.
Stay tuned for our next feature with Julia Pollak discussing the real-time data on layoffs. What signals indicate an upcoming surge in layoffs?
Julia Pollak provides key insights into the labor market's current state.
What does ZipRecruiter's real-time data reveal that others miss?
Let's explore her analysis.
What is Julia's primary conclusion regarding employment recovery?
She suggests we're not witnessing any real labor market rebound.
What about inflation impacts?
Yes, inflation remains a critical factor that could worsen conditions.
What concerns are employers raising?
Julia explains how tariffs are destabilizing their businesses.
Are smaller firms more at risk?
Absolutely, they lack cash reserves to withstand these pressures.
What does Julia say about wages relative to inflation?
Despite price pressures, many workers are seeing wage gains.
Is this sustainable?
Julia believes this trend may persist positively, barring inflation.
Where does Julia see growth potential?
She highlights banking and financial services as promising sectors.
What does this mean for job seekers?
They may find better prospects in these fields moving forward.
What should businesses take away from Julia's insights?
Flexibility and foresight are essential in today's economy.
And for workers?
They should stay informed and adapt to emerging opportunities.
But wait, there's more. Up next, insights from Matt on will Nvidia earnings beat save the bull market? Don't miss it. Did you catch Nvidia's latest earnings report?
Absolutely. The results surpassed expectations. $35.1 billion.
What does this mean for the overall market?
Let's dive into Matt's insights on this.
What's Matt's core message?
He interprets Nvidia's strong performance as signaling resilience in the broader market.
Could this really avert a market downturn?
Indeed, especially with Nvidia's favorable guidance.
Nvidia raised the bar, didn't it?
Absolutely, they beat forecasts significantly.
Is this sustainable growth?
That remains to be seen, but maintaining momentum is crucial.
Where does the S&P stand?
It's holding strong, exceeding previous high levels.
What critical levels should we monitor?
Key support is around 586, vital for a bullish trend.
What lies ahead for the broader market?
We can expect more resilience with decent indicators across sectors.
Does this include potential risks?
Absolutely. Anything below key support could shift market sentiment.
So, what's the main takeaway?
Nvidia's performance creates a bullish outlook for traders.
It sounds like an excellent time to strategize.
Definitely. Keep an eye on those critical levels.
And up next, get ready for insights from Jeff Park on the new Bitcoin ETF options. What are the key developments regarding Bitcoin ETF options?
Jeff Park believes we are on the brink of a major market shift.
Interesting. What prompted this expectation?
Let's break down his insights.
What's the core idea? Am I supposed to take from Jeff?
He suggests Bitcoin options could lead to unprecedented trading volumes.
How will this affect investor behavior?
Investors can leverage volatility uniquely.
How are investors reacting to these new options?
We're witnessing a surge in interest for long-dated calls.
What does that signal for market trends?
It hints at bullish sentiment and increased volatility expectations.
What makes Bitcoin's volatility unique?
It's propelled by a special mix of market factors.
Are we seeing this in other assets?
Not quite. Bitcoin's dynamics are distinct.
What predictions surround market dynamics?
Jeff anticipates significant changes in trading behaviors.
How should investors prepare?
They'll need to adjust their strategies to embrace volatility.
What's the ultimate takeaway for investors?
Adapt to the rapidly changing landscape surrounding Bitcoin.
Will this reshape investment strategies?
Absolutely, volatility will play a crucial role.
What do you think about the impact of Bitcoin options?
We'd love to hear your insights in the comments below.
What an incredible mix of insights we just heard.
Absolutely. Each guest brought a unique perspective to the table.
Jeff Park's take on Bitcoin ETF options has huge implications for the market.
And doesn't it add to the conversation about adaptive investment strategies?
Exactly. But it's interesting how Wright anticipates plummeting home prices.
Right? Some experts believe that's just the tip of the iceberg. But Julia Pollak's perspective on the labor market is equally illuminating.
For sure. It seems we've got a mix of optimism and caution among our experts.
It's fascinating that they all agree on the power of technology in this evolution.
But they don't see eye to eye on what that means for traditional sectors.
That's where the real discussion is, isn't it? Raising questions on timing and regulatory impact.
If you enjoyed hearing these perspectives, make sure to give us a thumbs up.
And hit that subscribe button to catch our future deep dives into the economy.
Thanks for joining us today. Be sure to check out our other videos for more insights.